We apologize for the minor background noise while recording this episode. Thank you for listening and enjoy the discussion. Welcome to the Treasury Update podcast presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in. Does managing bank fees seem like a daunting endeavor? On this episode of the podcast, Managing Partner Craig Jeffery sits down with Senior Treasury Consultant Stephanie Villatoro to discuss the necessity of regular management practice review, the importance of fee differentiation and analysis, and the value of market awareness on both an international and domestic level. Listen in to find out how to maintain proper bank fee oversight.
Welcome to the Treasury Update podcast. This is Craig Jeffery, and I'm here with Stephanie Villatoro, also from Strategic Treasurer. The topic today is managing bank fees, even if you hate it, or perhaps it should be even when you hate it. This podcast is a follow-on to the bank relationship podcast, where Stephanie and I discussed having a 360-degree view of your bank relationships. Welcome to the podcast, Stephanie.
Thank you, Craig.
Now, bank fee management seems so mundane. Why should people care? And I'm going to just say a few things before we get into it. When we think about managing services and fees, we think of cash management services. In the U.S., there's account analysis fees. There's also credit card fees through your providers, custody accounts for those that have heavy investment activity, trust account for some organizations, as well as FX transaction fees. So when we think about managing service and fees, we think about this whole topic. So I guess the first question, Stephanie, and you look after the bank fee management process for a number of companies and run that at Strategic Treasurer. But why should people care? This is mundane. It's paying bills. Why does it matter? Why should people continue to listen to this podcast?
So if you pay your mortgage, you're not going to pay something that's more than what you should be paying. So it's the same thing with bank fees. You're not going to pay more than what you're contracted to do. You don't pay a higher interest just because they're charging you a higher interest. You pay the interest that is in the contract. It is the same thing with bank fees, whether it is merchant card, whether it is cash management services, trust, or even FX for that matter. That is the main reason that people look at it, is to pay what they're supposed to pay. You review invoices in AP. From an account analysis standpoint, those are not reviewed necessarily the same way. It's on Treasury's responsibility, not an AP person.
Now, just to interject there, you used a term account analysis, which is not going to be familiar to many people that are outside the U.S., outside of Treasury. What is it? What is account analysis? What's an account analysis?
Account analysis for a U.S. bank, for your cash management fees that you pay on your bank accounts for services that you utilize, it is an invoice. It's an invoice of everything you've utilized in one calendar month for services at the bank, whether it is wire fees, information reporting. It can also be any other like check outsourcing fees, disbursements, anything that goes through your bank account that you're charged for. They group all those fees together on one invoice and charge you monthly.
And why don't they just simply call it an invoice?
They don't call it an invoice because they don't bill it the same way. There's typically earnings credit related to it as well, where they net some percentage of balances that you keep with the bank against the fees as well.
Because banks haven't always been able to pay interest on accounts, they use the balances to offset the charges that would normally come in. So it's a complex way of handling or getting around that. So you've basically described the process of managing fees because everyone has to look and review the expenses they have. Why else might they look at it?
Other reasons that you would look at it is, one, banks make mistakes. So their systems don't always necessarily talk to one another. Contract prices may revert back to standard pricing. So there's multiple reasons to be looking at your contract related prices for any variances from a month-to-month basis. And that's just based on your actual fee. So you have a volume, you have a price, making sure that price is correct. The other reasons that you might be looking at your bank fees are additional volumes. So maybe a service has increased, so you've increased a certain area of your bank fees. And that might be, for example, ACH, so a different type of electronic payment instead of check. So it's a replacement service. As you utilize that service more and more, you would get a volume discount. So as you hit another tier, there's an area for reduction in your standard contract pricing that you can negotiate with your bank. Another is underutilized services. Are you no longer using a service and you need to ask the bank to remove it? It has run off already and you just haven't asked for them to take that maintenance cost off, or maybe you just have one or two items running through that you need to transition over. A third reason might be, spiking in fees for a service or an area where you have a service, but it's an additional cost because something's going wrong. You make wire payments every day. All of a sudden, you have a spike in wire repair fees. So what's the underlying issue that's going on there? Is it on the bank side, or is it actually in your underlying system?
So it's a way to monitor your operational efficiency, your errors or issues. Most of those answers were about the cash management side of the fees that corporations pay their banks. What about the merchant card activity, the credit card processing? What are a couple areas that you would be on the lookout for?
Yes, there are two main areas we would look out for merchant card. One is just making sure your merchant card provider is giving you the best rate for the volumes that you have going through. Are they giving you a good rate that's in the market today? Is it, a standard rate, or do you have something that's more applicable to where your volumes are? That is one way you can reduce the cost, but that's just one small fee. The other areas, when you get to the card associations, you have various tiers of the levels of card processing, making sure you're processing at the lowest tier possible for your business. And those ways that you can reduce that are things that you can begin to look at. If you're at, a level 1 data where you're processing at the highest rate, how can you reduce that to a level 2 or a level 3?
Now, shifting back to cash management fees, you talked about spiking in total cost because your fees go up because your volumes have gone up because of errors, exceptions, someone pulling data from the bank system and using it to a great extent, or wire repair fees because some feed has gone wrong. We spoke earlier when we were talking about this podcast and the topic about some of the other challenges that happen, in terms of errors that can be made by banks, both in the bank's favor and in the favor of the organization that's being billed. And this had to do with how that data gets into the billing system. Sometimes it's very automated. Sometimes elements are dropped. There's a loss in transmission. They might not be balancing things. Sometimes items are even keyed in from systems that there's not a connection. It's keyed in, and those things can be keyed in wrong, or they can maybe not even make it to the billing system. So sometimes banks make errors in their favor and not in their favor. Anything else on those that someone should just be aware of to have that reasonable view?
Yeah, so you're right. Banks can make errors that are not in their favor, where they have multiple systems feeding into that invoice or analysis statement. The other way is that's not in favor of a client or a customer is, annually, prices may revert back to standard pricing and negotiated rates aren't put in on a timely basis. This happens pretty consistently across banks. So you have to be on the lookout, usually at year end, December, January, February timeframes, when they do revert back and they make system changes even throughout the year, that different price points could change back to just standard pricing instead of your negotiated rate.
What are some of the key differences between fees as banks charge them in the U.S. and, just speaking generally, obviously there's regional and in-country differences. What are some of the key differences between the U.S. and other countries and how they levy these types of fees?
I think one of the main differences when you're looking at U.S. versus other countries is the U.S. invoicing and fees are very detailed. So they will charge for a lot more for one transaction than other countries where it's more bundled. So you'll see less transactions from a fee standpoint, but they're are at a higher price point. So it's difficult to compare from that standpoint. Other things that I see in other countries is they may not bundle all those prices to a once a month fee where they charge you one time for everything that's occurred in the month, but they charge you at the transaction time, or they charge you maybe on a daily basis. So there's different timings of fees. Another difference is instead of per transaction at that point, they will bundle similar fees. So wire fees can be bundled across different branches where you don't have transparency into volume and individual prices.
Yeah, that's good. I know there's a ton of detail on that, and I do want to keep it at a high level. And I know you also had mentioned things to look out for could be banking structures could be overly complex and challenging to know what are the services are, what organization is being charged, how do you allocate those to the organization. But let's just shift over to the question about what types of bank analysis should a company perform.
So there's two main types, Craig. The first being operational. This is the most simplistic type of bank fee review. Your contract price, looking at are you being charged that price for your volumes? Some of those may be tiered, so you may have varying prices as your volume increases. Basically reviewing that. You were charged your correct price that you were in contract with.
This can be done visually or with a system, just straight up comparison. Okay.
Straight up comparison. So that's the most simplistic, that you're just making sure that if you're under contract, you're being charged correctly. The second is more strategic. This gets into a little more analysis, and it's not straightforward. So you're looking at identifying different types of opportunities in your bank structure. Can you consolidate banks? Do you have two similar banks that are performing the same type of operation in the same country? Can you just consolidate that and get a better pricing because of a higher volume? Another is, are your volumes trending higher or lower in different areas of the world or different services? Where can you move things around or shift to maybe a new service, moving from paper to electronic? Those are different areas that you can look at volume trends. It could be an operational change, and that shift from paper to electronic could be operational, but it could be also you're moving out of a country and maybe you're expanding into others. You're looking at operational changes and new opportunities there. And then also just rationalizing your fees as well as negotiating. You need to review those on a regular basis. Make sure you are paying benchmarked rates that are market rates. Bank fees change from year to year, up, down. They are not consistent.
Yeah, and your business changes, activity shifts over time. It will get out of alignment if you're not reviewing those at a frequent or regular systematic basis.
And that's not annual. That could be every 3 to 5 years. It just depends on when those operational shifts occur.
Having been responsible in the past for bank fees, analysis fees, custody fees, that was such a pain, and it seemed so much less strategic than managing relationships, ensuring that your banks can provide you with the advice that's needed over time. They can support you with capital and services and quality levels. Paying and reviewing analysis statements, reviewing bank charges seems very mundane. I would put it in the category of headaches that have to be done. How can a company get started and manage the process, either internally or on an outsourced basis? What are some of the steps? Let's go through them quickly to keep people paying attention.
Certainly. There's about 7 steps of looking at your bank fee process, and I would say it's mundane for most, except for those that like to find the needle in the haystack. So there's only a few of us out there. The first being just sourcing your data. How are you going to receive it? Most common for simple organization, maybe with 1 or 2 banks, you're going to get a PDF, but then you look at systems that can actually intake files and help you with that mundane analysis to get that quicker, especially when you have a lot. So those systems can handle different types of files, whether they're an EDI 822 or a type of XML file, which is the CAM T086 and the twist files. And there's issues with different files in regard. So some pass null values, systems can't handle that. So you have to look at the system you're utilizing and what is the best format for that system. And then you're looking at aggregating that data. That's your second step. So once you have it, how do you aggregate it and normalize it? Because from the US to other countries, you have to normalize the data because it is not consistent across US banks to US bank, and it's definitely not consistent across the world. Then it's analyzing, looking for different opportunities for identifying savings, looking at it by category if you're looking at information reporting versus your payments. And then you can look at negotiating. Also, when you're negotiating, you have to look at this more in a relationship context. Your bank relationships are relationships. They are long-term minded. You do not want to change banks. It's very complex and difficult to do that. So those fee decreases and increases should be marketable of what is in the marketplace today. And just following up and following through with them. It's kind of the making sure their input, making sure everything is processed appropriately at the end after the negotiation.
In the beginning, you talked about sourcing the data, the different formats. Why do they matter? How are they different? Shouldn't a format be a format? Now, you talked about 2 XML formats, an EDI format, and then some of the, I'll just call it the lesser electronic formats like PDF. Why are there so many different formats? And what does this mean for complexity?
From a complexity standpoint, there's a standard in the U.S. and then there's the international standards. You have AFP codes and you have global AFP codes that's trying to standardize the information, and that's what these file formats are trying to do. The complexities fall into place when a system is formatted for one type of file or maybe 2 of them, but not all 3. You have to find out which ones they utilize. And then there's typically difficulties when you have a system that's more geared toward maybe the EDI 822, which is the US standard, and then you're pulling in your global information and it's completely different. They may pass null values, for example, and then that breaks the system. And they have to do some programming to accommodate the different type of file format. So those are some things you have to look at.
So standards aren't standards, and sourcing data is easy to say. It can be a lot more difficult. Mm-hmm. And then as you talked about aggregating and normalizing, you have to normalize it because it comes in so many different ways. I liked how you stepped through those all the way through follow-up and follow-through. Just because you identify a discrepancy may mean you have an operational area to fix, something to communicate about how they should go about getting data, enacting transactions, or doing research. And then finally also following up with the financial institution to make sure you're getting credits or activity is being fixed properly. So when you look at managing the process, you can do it internally, externally, use a system, not? What are the options that people should look at, and what might drive some of those?
So the options I see out there, and the main one that typically bothers me, is do nothing. Some companies, that is the low item on the totem pole every month or every quarter, and it just stacks on their desk and they do nothing. And to me, that's money left on the table, because it's either you're being charged incorrectly, you're paying more for a service that is being provided to you than you agreed upon, or 2, you're not reviewing those things for inherent issues within your systems. So there are errors going on, and you are the final point of catching those because that analysis statement or that bank fee statement is laying on your desk. So that's the most common thing that I see. That is one thing that some companies do, because it is not an inherent daily task.
Yeah, that's pretty interesting. I know the other model is not do nothing. It might be effectively doing nothing, but waiting until you get the intern in for the summer or the winter break and then trying to catch up. It's one of those things. Can it be done today or tomorrow? Yes, and because it can be put off, it can be put off indefinitely. The old procrastinator's motto is, why put off till tomorrow what you can put off till the day after tomorrow? Oftentimes comes true, and then it has those issues that you talk about.
It does. And Treasury has very inherent everyday emergencies that you have to take care of on the spot. And that's why it typically falls to the bottom of the list every day.
And if do nothing is 1, what's number 2?
Number 2 is utilizing the company's PDF, reviewing your fees more from a high-level standpoint. Are they trending the same from month to month in a totals perspective? You may glance through and make sure nothing looks kind of askew, but you're not doing a detailed analysis.
So it's a very high-level
review. A third way is you're actually taking those paper statements, throwing them into Excel. You may have domestic and global banks, but you're really just looking at domestic because that is the analysis statements or invoices that you're receiving. The only way to get international fees may be through a file, but you don't have a system to be able to review those. So a lot is left off the table because you cannot see it. You don't have visibility. The fourth is actually getting a system and taking those, analysis files, automating maybe the contracting piece, and being able to analyze the fees a little more from bank to bank in a system. The issue with that is this is still low man on the totem pole. You don't have time for implementation because you're dealing with day-to-day Treasury operations and those items that pop up every day that are a higher priority. Another one is just outsourcing it. This is a mundane task, as you said before, that not everyone likes to do. So if you are able to outsource this, because it's only like 5-10% of someone's actual job, to actually review that on a regular basis, report that to you, go after those refunds, negotiate on your behalf, you will be able to be, the godsend of the Treasury world for your CFO because you're actually getting some money back. Savings can be anywhere from 10 to 30% of what you're paying today, and that is a recurring savings.
Yeah, it's an annuity. Mm-hmm. Yeah, so it's, some of the outsourcing activities can be outsourcing, just doing a comparison, say, here's a difference. Mm-hmm. And some of it can be fixing the difference, tracking them down, making sure everything's right, providing all the feedback, whether it's operational issues internally or problems with banking or agreements, tier levels, et cetera. Let me just jump back to the fourth element. When we talked about the system, you mentioned the fourth method is getting a system that can help you do some of that comparison. What are these systems good at, and what are they not good at? What don't they do?
There's various levels between different systems. There's they do intake the files, but some of them take some and not others. So that's one element. They do look at the contract pricing. So they're able to look at the contract price, look at the fee that's coming across, and spit out anything you're overpaying or underpaying. What they don't typically do well is tiered pricing and percentages. So there are countries that actually charge percentages of a payment that is outgoing as a fee. So those don't work necessarily well in all systems. Another thing that they don't do well, or not all of them do well, is comparing between banks and having some way to compare them from apples to apples, or creating that apple-to-apple version from apples and oranges. And then internationally, there's no systematic key that comes across in all bank fee analysis statements through a file transmission that can compare them. There has to be a human element involved.
Yeah, it was interesting too, because you talk about comparison with the prices you're getting with the contracted pricing, mm-hmm. comparison between your banks to see how each of your banks is comparing to one another. And then there would also be comparison with any kind of benchmark based on volumes or industry or region or country, mm-hmm. doing that type of comparison.
Another thing that they don't look at is anomalies. Are they underutilized, overutilized? Do you have spikes? Has it gone away and you're just paying maintenance fees like we said before? They do not look at that. That is the human element of extracting the data and looking at it.
So I know this is not really about fees, but when you think about services, if you have certain expectations for security services on account, for example, every disbursement account that has checks has positive pay. All of your accounts have some type of debit filtering or blocks to handle this, or there's something that checks, it has some type of other control on the account or service that you expect to have. Are they good at checking to make sure you're compliant with your overall control policies?
No, that doesn't exist today.
Do the systems pursue, like you said, the process on, some outsourcing goes and finds issues, communicates with the banks, communicates internally? Do any of these systems, they just provide a base for it, but they don't do the communication, the resolution of problem tracking or solving?
Some of them have actual workflow processing, but they're not doing the communication piece. There's the human element that's driving it all. So once the issue is created, so there's a discrepancy, then that has to be worked. It can be worked in the system, but it's literally just the case management piece. It's not the communication.
This is great. Obviously, some firms are very small and have almost no fees, and other firms are paying many thousands a month to hundreds of thousands of U.S. dollars a month or more, depending on when they're active. And so there's obviously a bigger impact on what's being done. Any final thoughts for somebody at this, as they look at this topic of why should I manage my bank fees, especially because I hate it?
Final thought is don't ignore it. And if you don't have time for it, look for someone who can help you, because that's just being money left on the table. And it will be more financially beneficial to be able to look at it immediately than to put it off.
Well, Stephanie, thanks for your time and joining me on that podcast.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.